Ethiopia's economic miracle, how crisis turned into a $32 billion comeback. With a civil war, soaring prices, and a currency in freefall, most nations would buckle, but not Ethiopia, because it just delivered its biggest economic comeback ever. What's really going on behind the headlines? Hello, I'm Saron Zamanil, and this is Analytica Today. This week, Ethiopia announced a stunning leap in foreign net revenue, over $32 billion in the last fiscal year, up a third from the year before. GDP growth hit 7.3%, outspacing much of Africa, in a world where even the global economy feels like it's teetering on the edge. So what's really driving this unlikely boom? Is it policy, luck, or both? And can it last? Let's break it down. First, let's remember where Ethiopia's been. Just 11 years ago, the country was locked in a cycle of mass protests and political upheaval. Then came COVID-19, followed by a brutal civil war that threatened to tear the nation apart. Some even predicted Ethiopia would become the Yugoslavia of Africa, breaking apart the weight of ethnic conflict, civil unrest, and corruption. In a region already marked by instability, Sudan, Somalia, the Red Sea, the odds were never in Ethiopia's favor. But if you look beyond the headlines, you'll see that Ethiopia's leadership has tried to pivot fast. Sweeping macroeconomic reforms kicked off in 2024 with a bold move. The currency, the birr, was floated on the open market after decades of tight control. This was risky. Almost overnight, the birr lost 139% of its value against the dollar. Imports got more expensive. Everyday life became harder for millions and millions, and inflation soared to over 27% last year, according to conservative estimates. So why didn't things just fall apart? Here's a surprise. While some pain was inevitable, Ethiopia's gamble paid off. The reforms did bring some quick wins. Foreign exchange earnings soared from 24.7 billion to 31.1 billion in 1 year, a record according to the National Bank of Ethiopia. Export revenues more than doubled, led by coffee and gold. The balance of payments, which had run in deficit for over a decade, posted a surplus for the first time in many years. Government officials credit these results to ambitious reforms, fiscal discipline, and a big push for private investment. And they're not wrong. Ethiopia stopped borrowing directly from its central bank, kept a tighter lid on public spending, and started making its banking and exchange systems more transparent. But is that the whole story? Well, not exactly. What really supercharged Ethiopia's foreign revenue was a perfect storm on the world market. First, coffee prices broke all-time records, surging to nearly $10 a kilo in February 2025, over 3 times the historic average. That wasn't because of Ethiopia alone. A bad harvest in Brazil, drought in Vietnam, and the ongoing Russia-Ukraine war all squeezed global supplies, sending prices flying. At the same time, gold hit unprecedented highs, $3,500 per ounce in April. Again, this was less about domestic mining policy and more about global turmoil. Protectionist tariffs between the US and China, recession fears, and central banks rushing to buy gold. Put simply, Ethiopia sold more of what the world was desperate for at the exact right moment. But here's the thing, windfalls are nice, but they rarely last. For every boom, there's a bust around the corner. Already coffee and gold prices are starting to cool down. And the birr's collapse, while great for exporters, has fueled runaway inflation at home. Ethiopia's export base is still razor thin. 77% of foreign earnings came from just coffee and gold. There's a fierce competition. Ethiopia exports 469,000 tons of coffee a year. Brazil and Vietnam together ship over 5 million tons. Debt is still a sword hanging overhead. Despite restructuring talks, Ethiopia remains in default and upcoming payments could test the government resolve. Foreign aid is shrinking, and social safety nets are stretched. Nearly 1 in 5 Ethiopians still rely on humanitarian assistance, and youth unemployment is over 27%. And there's a bigger question. Can Ethiopia make these gains permanent, or are they just a flash in the pan? Let's pause for a second, because here's where Ethiopia's story could pivot from comeback to cautionary tale, or to even something even bigger. Next year, Ethiopia plans to inaugurate the Grand Ethiopian Renaissance Dam, Africa's largest hydroelectric project. The dam is set to generate over 5,000 megawatts of electricity, making it one of the continent's biggest power sources. This means that vast new energy exports the potential to slash power shortages and a real chance to spark a new phase of industrial growth. The past year has proven that even in the roughest times, a country can pull off dramatic gains, with a little luck, smart policy, and perfect timing. But luck runs out. To stay on top, Ethiopia needs to diversify what it sells, ramp up productivity, and keep inflation in check. It needs to invest in infrastructure, support its people, and build resilience against global shocks. Because the real story isn't about coffee or gold. It's about whether Ethiopia can seize this moment, turn windfalls into lasting growth, and finally deliver for the millions who are still waiting for their share of the boom. That's all for today on Analytica Today. Don't forget to subscribe, share your thoughts below, and let us know. Do you think Ethiopia's luck will hold on? Or is it the real test just the beginning?